When faced with overwhelming debt, the thought of finding a quick and easy solution can be incredibly appealing. Debt relief companies, like Freedom Debt Relief, often present themselves as that solution, promising to help you settle your debts for less than what you owe. But how reliable are these companies? And what should you truly expect when considering their services? As a finance expert, it's crucial to approach debt settlement with a clear understanding of its pros, cons, and inherent risks. What is debt settlement? First, let's define what Freedom Debt Relief and similar companies offer. They typically specialize in debt settlement, which is a process where the company negotiates with your creditors on your behalf to pay a lump sum that is less than the total amount you originally owed. The goal is to reduce your overall debt burden. This is distinct from debt consolidation, taking out a new loan to pay off multiple existing debts, simplifying payments. Debt management plans, DMPs, working with a nonprofit credit counseling agency to create a structured repayment plan with creditors, often involving reduced interest rates, but aiming to pay off the full amount owed. Bankruptcy, a legal process to eliminate or reorganize debt under federal law. How does Freedom Debt Relief work? Freedom Debt Relief, as one of the largest debt settlement companies, generally follows a process similar to this. Initial consultation. They'll assess your financial situation, primarily focusing on your unsecured debts, like credit cards, personal loans, medical bills. They typically require a minimum amount of debt, often around $7,500. Enrollment and savings account. If you qualify, you'll enroll in their program. You'll be advised to stop paying your creditors directly. Instead, you'll make regular, agreed-upon monthly payments into a special savings account that the debt settlement company often manages. This money accumulates over time. Negotiation with creditors. Once a sufficient sum has accumulated in this account, Freedom Debt Relief begins negotiating with your creditors. Their aim is to persuade creditors to accept a lump sum payment that is less than the full amount you owe. Creditors are typically more willing to negotiate if your account is significantly delinquent, as they might prefer to recover some money rather than none. Settlement and fees. If a settlement is reached and you have enough funds in your dedicated account, the settlement amount is paid to the creditor. Freedom Debt Relief then charges its fee, which typically ranges from 15% to 25% of the enrolled debt amount, not just the amount saved. These fees are usually collected only after a debt is successfully settled. Program completion. The process continues until all enrolled debts are settled. The reliability question. What are the realities and risks? When asking how reliable Freedom Debt Relief or any debt settlement company is, it's important to differentiate between legitimacy and suitability. Freedom Debt Relief is a legitimate, large company that has been in business for many years. They are accredited by organizations like the Better Business Bureau, BBB, and industry groups. However, legitimate does not automatically mean the best or safest option for everyone. Here's a breakdown of the key factors affecting their reliability from a finance expert perspective. Potential positives. Reduce debt burden. If successful, the main allure is the potential to pay significantly less than your original debt. Freedom Debt Relief claims that clients who complete their program reduce their enrolled debt by an average of 20% to 25% after fees. Single monthly payment. It simplifies your debt repayment into one monthly payment to the program, rather than juggling multiple creditors. Expert negotiation. They handle the stressful negotiations with creditors on your behalf. Avoids bankruptcy, potentially for some. Debt settlement can be an alternative to filing for bankruptcy, though it's important to weigh the credit implications. Significant risks and downsides, where reliability can be questioned. Severe credit score damage. This is perhaps the biggest drawback. Debt settlement programs typically advise you to stop making payments to your creditors while they negotiate. This means your accounts will become delinquent, go into collections, and potentially be charged off, leading to a severe drop in your credit score. These negative marks can remain on your credit report for up to 7 years. Even after settlement, the debt will be reported as settled for less than the full amount, which looks less favorable than paid in full. No guarantee of success. Creditors are not obligated to negotiate or settle. Some creditors or types of debt, e.g., federal student loans, secured loans, may refuse to work with debt settlement companies. This means you could go through the process, damage your credit, and still have unsettled debts. Continued interest, late fees, and collection efforts. While you're saving money in the special account, interest and late fees on your original debts continue to accrue. This means the debt can actually grow larger before any settlement is reached. Creditors also won't stop their collection efforts, meaning you might still receive calls and even face lawsuits. Lawsuits from creditors. Creditors can and do sue consumers for unpaid debts, especially if payments have stopped for an extended period. A debt settlement company cannot legally prevent a lawsuit. If a creditor obtains a judgment against you, they could potentially garnish wages or put liens on your assets. High fees. While fees are only charged upon settlement, they are substantial, 15% to 25% of the enrolled debt. When you factor in these fees, plus any additional interest and late fees incurred during the process, the actual savings might be less significant than advertised. Tax implications. Any portion of your debt that is forgiven over $600 is generally considered taxable income by the IRS. This means you could end up with a substantial tax bill in the year your debts are settled, effectively reducing your savings. Dropping out of the program. A significant percentage of people who enroll in debt settlement programs do not complete them. If you drop out, you're left with a damaged credit score, potentially higher debt due to accrued interest and fees, and the fees you've already paid to the debt settlement company.